Good afternoon, everybody. Mark here at TapeTally.com for your Week 17 recap of the markets. Basically, we saw this week a gap down on Monday morning and then 5 days basically straight up. Today, we gapped higher, although we did finish lower than the open, but above yesterday's close. So that's why we saw here, a pretty decent move, but we did gap even higher on the day. So let's jump right into the analysis of the longer term time frame of the overall markets. The spider here, SPY, as we saw here, as we talked about last week as well, we're sort of stuck in this in the middle of this channel, neutral, sort of a neutral bias. We did see some buying, but as you'll notice right here where I have my mouse pointer, it was on lower volume. So there's a few things we'll talk about later that kind of indicate to me that this little bounce here may not last. I mean, nobody knows, but we'll talk about that a little bit later. So SPY, we're stuck in the middle of this range, neutral. Qs, kind of the same thing. I mean, this was all helped by the Nasdaq led lower, but it also led higher, and that's mainly due to Apple. Apple blew out earnings on Thursday, I believe it was. IWM, which is the lower cap stocks, we saw that move today. This has not regained, is not even close. Like if we look at the SPY, we'll see here that it's above these the April and May highs of last year. We're basically trading above that, but if we look at the iShares, we're not trading above that. So typically what that means is that the lower price stocks, the lower market capitalization stocks are not moving as well. So if we want to see high growth, typically a strong bull market, this market would lead instead of lag. But that's not always true. Dow Jones Industrial Average, same kind of deal. GLD, the gold, we saw it bounce right off its trend line. We talked about it last week. We were kind of waiting for this trend line break, and sure enough, we saw sort of a bounce and a move up, although on lower volume. Oil, basically dead money right now. It's really not moving. VIX moving downwards with the market going upwards, and the Canadian markets making actually a pretty decent move this week. If we look at the Canadian markets, I think they moved the most this week. Oh, no, IWM moved the most, but they were in second place there, so they have a lot of catching up to do. So what I wanted to do this week is basically show how the market works to frustrate the most amount of market participants. So I'm going to bring up this chart here of Spider. It's basically zoomed in a bit. We can on a daily time frame. So just draw a couple of lines here. In typical technical analysis, what this would be called, we saw like a break of a trend line here, right? And then we saw this sort of a bull flag. We saw this bull flag form here and a breakdown. So in typical pattern analysis of everything, this would give the bears the immediate go ahead to short, because this was sort of we had a breakdown on high volume here, so we can see this volume here, and the pull up, the bear flag that we had here is basically like a trap for the bulls to get into, and then we had a downward move here. Now, right away on this candle, the bears probably should have noticed a problem, that we bounced right off this level of support here, and we closed higher on that day. And basically we saw 1, 2, we saw a huge gap, so 3, 4, and this is the 5th day of the rally. So right here, for example, the bears would be shorting, trying to break this level. It could not do it. Market rocketed higher here, and a lot of them probably have their stops right here. Let me see if I can clear this. Yeah. So they basically have their stops probably set somewhere in this range here, and as you can see, a lot of the bears probably got stopped out. We saw the low volume, and today we did see a break. We saw a bit of a consolidation and a pullback. So I mean, we may see some more, sideways movement here, but this market really does not want to go down. It doesn't seem like it really wants to go up either. So we're kind of stuck in this range here for the time being. Now, how long this will last, nobody knows. I mean, it's going to do whatever it can to frustrate the majority of market participants. So we just need to remain patient, calm. I mean, we talked about earlier how breakouts were failing on Monday, on Monday, so it failed here, and we finally got this gap down. Bulls held support and skyrocketed higher. So next week, I mean, I say this often, but I think next week will be quite important to tell us, if we're just going to be stuck in this range here, we're going to head lower, if this was another head fake for the bulls, or if we're going to hit some new highs. So one thing to remember is always, one thing that I preach, I say over and over again, is that the market does whatever it can to frustrate the most amount of people. So when you're taking a position, or when you're thinking about the underlying overall market conditions, you need to think about what other people, what the average retail investor is thinking. So that's something that I do on a very regular basis. So that's it for this week. Hope you had a great week, and see you next week.